phase 2 of the banana zone, we're still in it. We've barely started it. The phase 2 correction should come from much higher, pulls back and then goes higher. This is not the phase 2 correction. This is still part of the banana zone. So there we are. It's just like the banana zone doesn't look obvious. We had all this shit here too. But when you look back on that chart, it's like, oh yeah, it's a banana. And you go back here, oh, it's a banana. But you fuckers would have been going, see, it's all over. You've never called the banana zone. You've got it all wrong. It's stupid. All of this time, all the way up, you'll have done the same thing. But when you go back and look, they're bananas. Now, this banana is going to be longer in time. So therefore, less spiky in price at this point. Maybe that'll come later. And I don't get it. I don't get all these people talking about it's the end of the business cycle. It's moronic to say that. It's the beginning of the business cycle, not the end. It cannot be the end of the crypto cycle if it is the beginning of the business cycle. It's as simple as that.
We seem to have identified a powerful confluence of liquidity and seasonality, now setting the stage for the next major Bitcoin rally. Raoul Pal's analysis points to a repeating cycle, where Bitcoin stagnates through August to October, then erupts with explosive gains into November and December. This pattern, Pal emphasizes, isn't random, it's liquidity-driven. Every major upcycle has coincided with an injection of global liquidity, often triggered by fiscal or monetary inflection points. But this time, the setup is even more potent. With the US government's extended shutdown delaying liquidity flows, a massive catch-up wave of spending is about to hit the banking system. When that happens, Bitcoin, Ethereum, and Solana could ignite simultaneously. For Pal, the message is clear. This is not the end of the cycle. It's the beginning of a new macro expansion. And Bitcoin stands to benefit more than any other risk asset.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Here's the trade. That's the seasonality. That's the seasonality. Remember, it's a liquidity-driven seasonality, and Bitcoin gets driven more than the Russell 2000, and it gets driven more than the NASDAQ, but the NASDAQ's more than the Russell 2000. That's where we are with the NASDAQ. So it's kind of November, December is where all the real gains are. So look at this. Seasonality is you kind of make no money from like August all the way through to November. And then you make a shit ton of money into the end of the year. Bitcoin. Oh, look, you don't really make any money all of September and October. And then somewhere in October, normally it's around the 16th, but this has been delayed because, repeat after me, the Treasury General account and the government shutdown, it's been delayed a bit. And then you get November and December. These are the months that make all the money. Now here it says, well, the market's normally peaking in the end of November. I would go back to this chart and say, I think this is more likely, where it peaks into January. And we've got many other charts that suggest it's like Jan, even Feb, where it peaks and then trades sideways into April or so and then goes higher again. So that's what we're looking at. Now, remember, for God's sake, we don't know whether this happens or not, whether this happens or not, or any other fucking variation. It's probabilistically what we think plays out. So if you do get a big, nice leg where Bitcoin seasonality here, now these are including old cycles, so it's exaggerated in price terms, but let's say it goes from 300 to 900, goes up 3x in 2 months. Let's say, let's halve that, goes up 1.5x or 1x. That's when you take some lifestyle chips off in case we fuck this up. That's the bit where you're like, I don't really care if I've got it wrong. Or you buy some short-term puts because remember, volatility is super low. Right now, you should be buying calls because volatility is very cheap. IBIT calls. You should all own IBIT calls. I think this is a continuation pattern. And what happens is somewhere around here, we might sell off further because the government's not reopened. When it reopens, the government starts spending, writing checks quickly. They've got a backlog of pay, inject massive amounts of liquidity, goes into the banking system, number go up, right? We need that to happen. And I think the shit fight will continue. This is the second longest government shutdown in history. We may end up being the longest, let's see. But when it comes, number reverse. So that's Bitcoin. Nothing really to see. Ethereum. I mean, what a cutie of a chart. One of the world's great charts. Here we are, retesting the breakout of the wedge, one of the world's greatest wedges. You know, we saw these kind of things here. It breaks out, it does this. Remember what it broke out here? Did this, and then eventually did that. That move was 310. I mean, it's like a 10x. So what's it going to be from here? Who knows? Solana. Oh my God, look at that. Let's go back to ETH. So this Solana chart is this period in ETH. Sort of, because the pandemic kind of screwed it up a bit, but let's call it this period in ETH. Is what we're seeing in Solana now. So it kind of did the wedge pattern. Again, depending how you draw it, nothing's ever perfect. If this is a flat top wedge pattern, and somewhere around here, it finds its base, hooks up, and then it will have the power to break through, and we can have a serious move, the move we've been expecting. That's still to come. That's how the second cycle plays out. Then you consolidate again. And that seems to be, you know, if I go back to Bitcoin, let me change that to the monthly chart. So, you know, if we look at kind of the second cycle, it did this, they had the correction. They all do the same kind of pattern as you get the adoption. The first move is brutally large, then a decent sized pullback, and that was a huge pullback. Doesn't look like it in the chart, but guess what? Let me change this from a log chart just so you can just see how brutal it was to own Bitcoin back in the early days. It was that brutal. It was so brutal that you have this massive run, enormous, gigantic pullback, and then a stupid run, gigantic pullback, stupid run, gigantic pullback, stupid run, right? You get the picture. Okay, so that's Solana. Nothing exciting to see. SUI. Oh, look at that chart. This is a first cycle token. Tends to be good in the first cycle, and because it's all full of promises and a lower free float, and capital can drive these higher. Nothing wrong going on here. Could we come further back down in here? Yeah. You know, could we even test $2 again? Yeah. Does it change anything? No. What should you be doing? Buying. And not going, oh my God, it's going to die. Raoul said Sui's going to go up and he's a moron. And it's just like, it's terrible. And I've got everything wrong. And it's the worst thing. Nothing. When you look at the macro framework, you look at the longer term charts, you just say, well, I might as well turn my computer off and stop fucking around on X, looking at some traders saying the top is in. It's highly unlikely to be in. Highly unlikely, because the macro's nowhere in. And I don't get it. I don't get all these people talking about it's the end of the business cycle. It's moronic to say that. It's the beginning of the business cycle, not the end. It cannot be the end of the crypto cycle if it is the beginning of the business cycle. It's as simple as that. So we told you, we put out all of our signals based on liquidity back in 2022 and said the low is in. We really got that right. We bought Solana. Solana absolutely crushed it. And then we switched later. And then back in 2024, we said, okay, we're now about to start the banana zone. Why? Because we're starting to break the new all-time highs. And this is Bitcoin. So we actually gave out the signal on liquidity in that week, the 5th of August week. I was in Zambia, came back. We said, yeah, banana zone is about to start. And by September, we said, this is it. And what happens? The first leg up goes from 52,000 to 108,000. And you lot go, oh, okay, bananas. And then we said, look, there's a phase one correction. Remember, global M2 was correcting. Oh, it comes back down. That's the phase one correction of the banana zone. Phase two of the banana zone, we're still in it. We've barely started it. The phase two correction should come from much higher, pulls back and then goes higher. This is not the phase two correction. This is still part of the banana zone. So there we are. It's just like the banana zone doesn't look obvious. we had all this shit here too. But when you look back on that chart, it's like, oh yeah, it's a banana. And you go back here, oh, it's a banana. But you fuckers would have been going, see, it's all over. You've never called the banana zone. You've got it all wrong. It's stupid. All of this time, all the way up, you'll have done the same thing. But when you go back and look, they're bananas. Now, this banana is going to be longer in time. So therefore, less spiky in price at this point. Maybe that'll come later.
Pal calls this the banana zone, a phase where liquidity expansion meets crypto adoption, producing asymmetric returns. Historically, Bitcoin can 3x in a matter of months during these windows, but Pal tempers expectations. Even a 50-100% rally would be meaningful. His charts suggest a potential peak extending into January or even February before a mild correction and renewed advance through spring. Importantly, he views short-term weakness not as a threat, but as opportunity. Cheap volatility makes options attractive, and strategic accumulation during dips compounds long-term gains. On the technical side, Ethereum's retest of its breakout wedge and Solana's emerging structure mirror earlier Bitcoin cycles: massive rallies, deep retracements, and renewed parabolic moves. From a macro perspective, Pal underscores that we are early in the business cycle, not late. With global M2 expanding and China's PBOC injecting liquidity, the probability skew remains decisively bullish for digital assets.
Don't fuck this up is the key thesis. I saw many of you, unfortunately and sadly, fucked it up last week. Last week, we had that gigantic liquidation. It was a fun Friday where everything broke. Now, that was a very interesting moment because that whole liquidation process was really a flash crash. We saw this in equities in 2010 when suddenly the system breaks and a bunch of things compound. And it was the automatic liquidations that compounded in the fact that the pricing oracles weren't working on Binance, and the Athena depeg on Binance, not elsewhere, caused a whole bunch of ramifications. But really, that's all technical in nature. And as I wrote on Twitter, these things tend to recover quite quickly. We've got a couple of other factors coming on that means we might hang around for a little bit longer, but nothing to be concerned about. So just think of weakness as a gift. All I did last week was instruct the bank in the Cayman Islands to send money, to get money into the thing. It takes fucking days, but you know what it's like, because I made the mistake of not having stable coins. But really, having some stable coins for times like this is great. Particularly if you've got some excess earnings, you stick some into stable coins, you wait for one of these opportunities, and you feel good because you compound at lower prices. So that's what I've been doing anyway. Let's talk the important things. The markets aren't really important because honestly, it's actually the weirdest thing is I actually don't do anything. I mean, outside of, I bought a whole bunch of NFTs over time. The actually last time I traded crypto, aside from buying last week, was April when I bought more. And then before that, when it's switching Sui into Solana. I mean, I don't do anything. So there's nothing really to do. But everybody goes down to short-term charts and thinks that they are the next great trader and that they need to swing trade this because that's how you make money. Or you need to short-term trade it. You need to time this whole thing. And basically, everybody who's a fucking OG in this space has done pretty much fuck all. You just buy it and then you don't do anything. The people who make the most money have not done anything whatsoever since like 2010. We're seeing actually some of those whales actually exiting now because they bought in at $2 and they're selling at 100,000. I think I'd take that as a profit. Taking some money off the table, that's fine. But it's not the traders who make the most money. That's the most alluring thing about bloody Twitter and all of these other things is you think it's going to be the short-term traders. It's not. It's the intelligent risk takers. Some people can time cycles better or pick things at the right moments, but really it's that buy and hold strategy that works. And we see a lot of this on Real Vision. When you look at the leaderboards, look how long those trades have been in the leaderboards. The ones that are up like 20x, 10x, or more, they're positions that were put on a while ago and people have just run them. If I look at the stuff I'm doing at Real Vision Pro, we've had several, many option trades that are up 2, 3, 4, 5, 600%. Several crypto positions that have done extremely well just this year alone. And that's from timing getting these big sell-offs, holding onto it and not doing anything. We've been using this chart of the Chinese central bank balance sheet, which is the only major government using their balance sheet right now, versus 10-year bond yields with like a 2-year lead. And it's been working perfectly since we started pulling this out in 2022. And what it's suggesting is we're now in the acceleration of the use of the PBOC balance sheet. Balance sheets are like the most powerful force multiplier. Somebody's going to be using one somewhere. Back in 2017, it was the Chinese that drove the entire crypto cycle because the US was tightening rates, and it was doing QT. I mean, all of the bad things, all ridden by the fact that the PBOC, the UK, and the ECB all stepped on the gas. The PBOC is going to be stepping on the gas. Interesting. Look when it peaks. It peaks in 2026. That's super interesting. We also know that gold leads by a significant period of time, about 12 months versus ISM. And that's telling us that, in 12 months' time, we're still not peaking the business cycle. Has gold peaked today or not? I'm not sure. I still kind of think it goes another leg from here, but we have some more volatility, more correction, another leg higher. I'm indifferent to it. I'm not in the gold trade right now. But what it does is give us a lead on the cycle. So go back to the gold chart. This is the chart that everyone on Twitter has got a different time horizon for. This is the one we've been using. I've not really shared it super publicly, but this is gold with a 188-day lead, so 6 months lead versus Bitcoin.
Raoul Pal's final message to investors is deceptively simple. The temptation to overtrade or panic sell during corrections has historically destroyed far more wealth than it's created. The biggest winners in crypto have been the disciplined holders who understood macro liquidity cycles, bought early, and simply waited. The same logic applies today. As balance sheets expand and fiscal spending resumes, Bitcoin remains the purest liquidity proxy in global markets. Pal expects the banana zone to unfold more gradually this cycle, less spiky but longer in duration, potentially extending into 2026. His conclusion is unequivocal. The structural tailwinds, monetary easing, digital adoption, and sovereign debt monetization are all aligning once again. The crypto cycle is not over. It's just beginning its most powerful phase. Investors who recognize this dynamic, stay patient, and position intelligently could ride one of the greatest asymmetric trades in modern financial history.